Hello and welcome to Bloomberg Quint. We hope all of you all had a very good start to the new year. But the first question, Agam, I believe on everybody's mind is going to be how 2017 is going to be. Basically, if we just talk about the variables which will probably move the markets in 2017. Well, domestically, I think a lot of it would depend, the equity performance would depend on how quickly the impact of demonetization wades away, what sort of tax swaps come through in the budget, what the Prime Minister, the Finance Minister does with the fiscal deficit target, and how quickly that elusive double-digit earnings growth comes back. Globally also, you have factors like the crude price movement, the Trump administration policies, and what Fed does with the rate hikes will also have some impact on the market direction and the fund flows. But having said that, the Indian equity benchmark indices Nifty and Sensex started 2017 on a relatively negative note but ended almost flattish as banking stocks dragged Nifty lower. So the Nifty did touch an intraday high of about 8,200 but couldn't sustain that level. To add to that, you had the December manufacturing PMI coming in at 49.6, a contraction for the first time in 11 months, indicating that the demonetization did take a toll on the manufacturing performance. So overall, it is this demonetization factor which is going to move markets at least in the very near term. Agam, F&O markets, nothing much happening, very quiet day.
Absolutely, very low turnovers, and we haven't seen much in terms of change for the benchmark indices too. So which means that while we may have seen a little bit more addition towards open interest as far as the Nifty or your bank Nifty is concerned, it really doesn't say much because simply because of lack of participants. We're waiting for a lot of these traders to come back. And in the broader markets, when it comes to the options, well, we are looking at some spike in the lower level puts. So we are looking at writing in the 7,900 put and the 8,000 put. On the whole, as you can see, we've hardly seen any activity whatsoever in the rest of the options, and that brings me to your open interest distribution, which once again indicates a 200-point range. It's a broad range between 8,000 and 8,200 based on maximum open interest. So once again, nothing's changed substantially from Friday, but and we're all waiting for more participants to come in so that we can see more churn in volumes, and that could also give us a direction as to where the markets are headed from here on.
Alright, let's head to the Nifty movers. So you had the likes of Ambuja Cements, Ultratech Cement, all of these. You also had Tata Steel, Mahindra, all gaining about 3.5%. In case of Tata Steel, of course, you had a company official saying that it was a much better month. December was much better for Tata Steel than November, which was hit by demonetization. Cement stocks, again, you saw them rallying on the back of PM's announcements on Saturday. None of the real estate stocks are a part of that Nifty 51 stocks, but Realty Index was the top sectoral gainer. It ran up as much as 4%. On the other hand, you had HDFC, Bank of Baroda, SBI, IndusInd Bank, ICICI Bank, all of these that were correcting by more than 1.5%. So it was the MCLR, or the lending rate cut, which actually put banks in focus today. So banking stocks, all of these corrected after SBI's 90 basis points lending rate cut led to fears of rate wars and pressures on margin. Many other banks followed suit. So you had Punjab National Bank, Union Bank, Kotak Mahindra Bank, even Dena Bank, all of them cut their lending rates by anywhere between 45 to 90 basis points. So with this, the year has started on a disruptive note, at least as far as the banking sector is concerned, Agam. And of course, in case of SBI, it lost as much as 2.5%, as analysts were surprised by the magnitude of the rate cut that came in. It was the highest in the past many years. But on the positive side, again, all these banks really had your low-cost CASA deposits lying, a lot of liquidity infusion post-demonetization. So this asset reallocation, which could move from investments to all your loans, will actually be incrementally positive for these banks. If this rate cuts do translate into credit growth, at least some pickup in the credit growth. But there's a very interesting trend that we notice as far as housing finance companies are concerned. So there's a divergence as far as the stock price performance of the larger housing finance companies like HDFC and LIC Housing Finance is concerned,
Right.
and on the other hand, you had your Canfin Homes, Group Finance, Repco Home, which were really doing well, and that also happens to be a viewer
question. Yes, sir.
Okay, so the main reason for this is that your larger housing finance companies would directly be competing with banks like SBI, and hence on the back of given the SBI's rate cut, even they would be pressurized or forced to cut these lending rates, so again putting pressure on the margins. Now SBI had benefited from all these low cost CASA deposits, and hence it could kind of afford to take such a big lending rate cut, but it is going to add to margin pressure as far as these housing finance companies are
Right.
concerned. On the other hand, if we specifically talk about the smaller ones, now they're supposed to have or believed to have slightly higher pricing power. Many address smaller ticket loans and could also benefit from banks lowering the interest rates. Remember, all these NBFCs or housing finance companies also borrow from the banks, so their cost of funds fall. So that was another reason where we saw that trend in the divergence trend. But continuing with demonetization, Agam, we had a lot of market experts who were telling us the first set of data that they will actually be watching out for
Will
an
be the
entire
auto
month
sales.
will be the auto sales.
Right. Well, you know what, I'm going to start with the poll because the poll is the more interesting one, where we'd asked whether or not they can expect a good sales for the month of December. I mean, no one was expecting good sales, but everyone had a certain expectation. Based on that, about 41% have said that they were looking at weak sales, but more or less in line with expectations, and that's also the kind of trends that we are getting for the month of Jan, followed by another 66% who said that I think that's the wrong number, but with the next set of the people have about 33% who are saying better than expected. So on the whole, we haven't seen a lot of people going for expectations a lot worse than the kind of numbers that we've seen anyways. And that brings me down to the actual numbers right now. So we had Bajaj Auto sales, which have declined by 22%, but the stock, as you have seen, has not moved further below 2%. So this was something which is priced into Bajaj Auto. You had Ashok Leyland fall of 12%. That was also something which the street was expecting, and that is more or less in line with expectations. M&M has seen a drop of 4%. Do remember, M&M is also going to go ahead and raise prices for its cars by as much as 26,500 across categories of passenger vehicles as well as utility vehicles, also dropping volumes by as much as 8% on a year-on-year basis. So weakness is there, and this is more or less on expected lines. I think now analysts will see how the fact that the cash comes back and how that will be used, and that will have what kind of impact that will have in volumes going forward for the month of January.
So Agam, sort of two conclusions. One, you said Maruti sales have been pretty resilient, down just 1%, and of course a lot of broking firms have Maruti as a topic because they believe that they will be able to do much better than a lot of the other auto companies.
I'd like to point out in Maruti's case, because they have such strong exports, this time, given the fact that their exports have moved up by 47%, that's something which has aided Maruti. If you look at its domestic performance, it's not been that great, and again, its domestic performance is not worse than what the street was expecting. Right. It's the exports which have held Maruti out there, and that is a factor that's working out for Maruti right now.
Same is the case for Eicher Motors, because that's another stock which hit a low of 20,000 and then really bounced back from there.
I would say what's really worked for Eicher Motors is the fact that all its bikes are towards the top end, the premium segment, right, which means a lot of these bikes are financed through credit, and hence it hasn't seen such a bad month as far as volumes go. In fact, the volumes are much better than what the street was expecting. We were expecting about 20 to 25% increase on a year-on-year basis. It's come out with a 42% increase. So it's actually been a very good month for Eicher Motors.
And hence the kind of run up that we saw as far as Eicher Motors is concerned. Agam, what about the mid caps? You've also been looking at other mid caps.
Right. So as far as the broader markets go, and let me just quickly open up your broader market, index here, that is the Nifty 500. Well, once again, we really haven't seen too much of a change, but when it comes to your advanced decline ratio, we're looking at three gainers as against one decline. So with respect to gainers, we have Kolte Patil Developers, which is locked in upper circuit, followed by MMTC up as much as 17%, Dredging Corp and Nilkamal also gaining substantially, with ITD Cementation up 11%. On the losing end, we have some weakness in LIC Housing and some other smaller housing finance companies, as Shraddha just explained. Bombay Rayon, Bank of Baroda and Simplex Infra, as well as Marico, also declining to a certain extent. But once again, today's day belongs to the ones which have gained as far as the broader markets are concerned. And we hope that this trend continues at least for some time, because we are expecting a very volatile January.
Correct. All right, so that's all from us today.
Yeah.
Stay tuned to Bloomberg Quint, and we'll see you again same time tomorrow.